Greetings and welcome to In the Loop Weekend Ag Talk, brought to you by Alphen Insurance Agency, the home of Policy Plus. Be sure and click the subscribe button at the bottom of the video so you can stay up to date on all things crop insurance and agriculture. Thank you for joining in. Let's jump over to the markets and see how things finished up this Friday afternoon. An exciting week for corn as it starts to rebound from the recent lows. China is back in the market. A little bit more on that in just a minute. May corn finished the week at 634 and a quarter. December corn finished up at 561 and a quarter. May wheat finished the week at 710 and a half. July wheat finished the week at 719 and a half. May cotton finished the week at 77.83, while December cotton finished up at 79.51. May soybeans finished the week at 1476 and a half, while December beans finished out the week at 1313 and a half. When you insure with Alphen Insurance Agency, you get Policy Plus. If you've got livestock, give us a call so we can talk to you about livestock risk protection. And we can also talk about PRF, Pasture, Rangeland, and Forage Rainfall Index Protection for your grazing cattle or your hay operation. As we look at U.S. Ag News highlights, we'll start out with ethanol. U.S. ethanol production was up ever so slightly on the week, while U.S. gasoline demand fell 6% week over week. As a result, ethanol stocks were up 22 million gallons. The ethanol price has been relatively stable for near 2 months at just over $2 per gallon. NOPA released February crush data this week. NOPA members crushed 165.4 million bushels of soybeans last month. This was the best number for any February on record, but was slightly below trade expectations. The February soybean crush was minus 7.6% versus January, but 0.2% higher versus the same month last year. The seasonal decline in February is fairly normal. October, November, December, and January tend to be the strongest months of the year. U.S. grain export sales were generally strong last week. U.S. exporters sold a net total of 1.24 million metric tons of corn for delivery during the current marketing year. Japan and Colombia were two of the largest corn buyers. The data is accurate as of March 9th and does not include the week's flash sales to China. Looks like we had 4 days in a row of sales to China. Accumulated corn shipments are still minus 33% versus the same period last year. USDA projects a 25% decline versus last year for the marketing year. Wheat sales increased to 336,700 metric tons. That's 12 million bushels. Soybean sales were adequate at 665,000 metric tons or 24 million bushels. As mentioned earlier, China is back in the market to purchase U.S. corn. We have just witnessed 4 days in a row of purchases from China for U.S. corn. When we look at markets, fund traders have liquidated a huge amount of length in the corn market. CFTC released more backdated commitment of traders data this week. In the weekend in February 28th, large money managers sold a whopping 151,000 contracts of corn. This was the largest one-week liquidation event on record. There have only been one or two other occasions in which funds sold a net total of more than 100,000 contracts in a single week. Fund traders were also big sellers of soybeans and SRW wheat. During the week ending February 28th, funds were net sellers of 57,000 contracts of soybeans. The net long of 131,000 contracts is still large historically. Funds sold 21,000 contracts of SRW wheat. The net short of 94,000 contracts is the largest since January 2018. For the regular listeners, you know that cotton is one of my favorite crops to talk about. Researchers at the USDA Research Service bred 4 cotton lines that can be used to make self-extinguishing textiles when exposed to fire, potentially reducing the need for flame retardant chemicals to be embedded in consumer products. According to a recent study, the cotton lines were developed from cultivated cotton varieties and possess a novel flame retardant trait. When exposed to an open flame, The fabric from the new cotton line self-extinguished, whereas regular cotton fabric burned entirely in seconds. Use of these lines to develop commercial cultivars creates an opportunity to improve the safety of cotton products while reducing the economic and environmental impacts of chemical flame retardants, says Brian Condon, senior author of the study and retired research leader at ARS Cotton Chemistry and Utilization Research Unit in New Orleans. These lines will significantly benefit growers, producers, and consumers. That is exciting news for the cotton industry and for cotton producers. Hopefully, this could potentially create some new demand for cotton products grown by U.S. cotton farmers. The commodity complex remains under pressure. The Bloomberg Commodity Index fell to its lowest level since January 2022 this week. The index is 28% removed from the high that was posted in March 2022 following Russia's invasion of Ukraine. Energy complex has led the index lower, although the vast majority of commodities within the index have fallen. The index is comprised of roughly 30% energies, 23% grains, 16% industrial metals, 19% precious metals, 7% softs, which would include cotton, and 5% livestock. This week, it was also reported that the CPI rose 0.4% in February and 6% over the same time last year. According to reports, African swine fever is again a problem in China. Reuters reports that infections increased substantially beginning in January. Analysts at the Chinese security firm said data from swine fever virus testing companies show the number of positive detections exploded after the New Year holiday. The order of magnitude in a single month has reached the level of the whole year of 2022. We guess the current swine fever infection area in northern production areas may be reaching 50%. The firm believes that this outbreak is not nearly as serious as the 2019 outbreak, but that hog production could easily be reduced by 10% in China. An interesting World Ag News article on cotton. 7,000-year-old cotton fibers found in the Near East. According to the report on timesofisrael.com, Israeli archaeologists have discovered the earliest evidence of cotton in the ancient Near East during excavations in Tel Saf, a 7,000-year-old town in the Jordan Valley. The newly found microscopic remains of cotton fibers join a long list of other preserved prehistoric organic materials found at the site. Previously, historians believed fabrics in this region in prehistoric time periods were primarily made from other plant matter such as flax and linen. Cotton was not native to the area, and discovery points to Tel Saf's importance as a global trade hub. The cotton likely came from what is now Pakistan, the only area in the world that had domesticated cotton during this time period. This week we spent some time on Wednesday afternoon and updated our budget calculator for crop budgets for 2023. When we look at double crop wheat, looks like the total cost of production is $469. Double crop soybeans, total cost of production, $411. When we look at full season soybeans, that comes in at $533.50. Corn, $710.50. Cotton came in at $699.50. Now you may ask, what does that look like in a yield per acre for the break even? Wheat was at 67 bushels. Double crop beans, 30 bushels. When we look at full season beans, right at 40 bushels. Corn break even is almost 111 bushels. And the break even for cotton at these numbers was 848 pounds. For us to look at your budgets for you or send you our budget calculator, just give us a call and let us know. We'll be glad to help you or send it over to you. Well, folks, that wraps up this edition of In the Loop Weekend Ag Talk, brought to you by Alphen Insurance Agency, the home of Policy Plus. Hey, remember to keep mental health a priority around the farm and around the home. Make time for yourself and make time for those around you. Thanks for tuning in. Y'all have a great weekend, and we'll talk to you next time.